Alrighty. Good morning, everybody. Welcome to the Hurley Investments Trade Findings and Adjustments of July 13th. It's been a couple weeks. We took a little break over the holiday week, and it was good. I hope you guys had an enjoyable Independence Day and were able to spend some time with family. So what has happened? Well, you can kind of see this long-term S&P 500 chart. We're on a nice big bullish run over the last 6 months. Maybe we'll call it 4 or 5 months because we had this pullback back in end of winter, spring. February to March. And once again, we keep bringing in higher lows and higher highs. Just about to touch the overbought here. So, just to retouch on some things we talked about on June 29th, a couple weeks ago. Talked about taking puts off of Boeing. That was a good idea. Once Boeing came back up above this 50-day, they just kind of are sporadic in this range between 200 and 220. And so you kind of got to move quick. I spelt this wrong. Ford has continued to have a nice run. It's slowed down a little bit beginning of this month, but still holding 15, and it's been testing 1550. So we talked a little bit about getting protection on a couple weeks ago on 14, or at least we had it on at 14. That was kind of more back here when it broke above 14. Yeah, probably around here. You can kind of see it dip back down and hold it. So we took that back off, which was nice as we started to take another run up. Let's see, we talked about Baidu. $141 puts were off. Good idea, but now we're hitting up that 150 range. At the same time, it does feel like Baidu is sort of due for a real breakout. It's been sporadic, but has gone up significantly, 116 up to 150. Struggled the last month or so, but has held up so far. And we'll see about getting 150s back on, but right now, reluctant to add protection so much just because we're further out in August for their Baidu earnings. And yeah, we just have to buy a long period of time, which we might just consider to do, or just just look at getting a normal month or 6 weeks and time frame of protection just in the meantime. But that's where we're sitting at with Baidu. I talked about how I wish I'd kept the 141s on, but we got 135s on, and then we're ripping them off. This was just a very sporadic, big movement period. These 3 weeks, ending June and beginning July. If we get protection on now and it bounces, it really sucks to lose coming and going. Which in this case is pretty much what happened. But if I can just do this, that's a good trend towards that 50-day. So I didn't want to see it go all the way down to the 50-day at 130 before we had looked to protect. We got 135s on here and it bounced, came back down. We got a little bit back, but not much to say there other than just trying to find that trend, and Baidu it's sometimes difficult, which thankfully in the past we've done quite well protecting, adding shares, and sometimes it doesn't work out. But we still have the shares, and those are still making money for us on the way up. So it works out. So let's see, the 29th, that was this day. That's why I was speaking kind of frustratingly, I guess. Let's see where we were at on the market. 29th. Yeah. The market went up, but some of our stuff went down, including Baidu. One day doesn't make a trend. One day should never make or break your portfolio. Time usually takes care of the portfolio over a longer period, which is all true and which I am sticking by. So, what's happening now? We've got our market, as we talked about, continuing to go higher highs. We'll probably hit this RSI and have a little bit of a pullback next week, maybe setting a higher low. Seems to be how it's gone. It's for a while it didn't even get close to this upper trend, upper RSA line before making some pullbacks. We had a lot of the springtime that was just sideways. But since the Fed has been talking about how they might be getting close to being done raising rates, and since we've gotten more recently at least CPI numbers and inflation numbers that are lowering in rate, that has been a big boost to our market. That's what's caused this run up. Run up in June mainly was because we had heard that the Fed would take a break on June from raising rates. After that happened, Jerome Powell came out and says we're still going to be raising rates, which is basically the same thing he said in his meeting. And then interviews after just kind of reiterated it, and that kind of put a little bit of a damper on a big run up. But I mean, it was the first time we had hit overbought in months. So that kind of makes a lot of sense. Market getting a little bit ahead of itself, but as you can see, it's still supported and continued on for the time being. I don't know. I'm sure Kevin talked about this last on his Monday commentary, but I just want to kind of reiterate it a bit why uh, this kind of outlines why we're seeing this nice bull run. And then I want to talk about Meta and Disney. All right, so what it all means, they were talking about how the yield, talking about bonds. So this is a chart of treasury yields. This isn't the price of bonds, this is the yields. The price or premium you pay for a bond trades inversely to its yield. The yield is what you make in interest. So the interest rate, basically. So this yield had a top back close to February and hitting a double top up here end of June recently. Normally double tops, technically they can signify that uh, usually we're talking about stock, so I was going to say stock, but in this case, a yield. In any kind of chart you're looking at, double top, usually bearish because it shows that something that you're tracking, be it a yield or a stock price, can't get above a certain level or is struggling to get above a certain level, which doesn't mean or guarantee that it's not going to get above it. It just means right now it's struggling. So they were talking about is longer dated yields are running into resistance for now. And they believe that has to do with three things: a belief that economic activity will be slowing, a belief that inflation pressures will be easing, and a belief that monetary policy will be less hawkish, or what that means is the Fed will be done raising rates soon. So notice this is important observation to make. It says belief. Belief that economic activity is slowing a bit, belief that inflation is easing, belief monetary policy is the Fed is going to be done raising rates soon. It's all perception. And right now, the perception that yields are topping out, double topping, the perception that the Fed is going to be doing a couple more rate hikes and then going to be done this year, most likely. The perception that, real wages, or I guess that's not a perception, but the fact that there's real wages that are decreasing because of inflation and the whole hiring and job situation, the belief that that is cooling down. In this bullet point, they call that economic activity is slowing. So all these things kind of add up to the perception that things are going to be grand and dandy. Obviously, it's the market doing what it normally does, which is forward looking and making assumptions based off of things the Fed says, making assumptions based off of charts, making assumptions. And so for now, the market looks, uh, let me rephrase. For now, it looks like things are going to be turning around, continuing to go up for our stocks, and continuing with a bullish recovery for a little while. Um, Earnings coming up. What do you think that means? Does that put a damper on it? Are things going to be um, crap, for lack of a better way to say it? Think about that for a second. So their final point is this could very well mean that resistance longer dated treasury yields have encountered will hold up, and that further price appreciation will be seen in long dated treasury securities. If so, that would be constructive for stock prices, which often find support when rising treasury yields run into resistance. So just quick economic lesson, yields go up, stock prices struggle, and inversely, when yields start to come down, or in this case just struggle to go higher and come down a bit, that means there's more opportunity to make money in the stocks. Okay. It also means, if you read their whole thing, is opportunity to buy bonds at higher yield rates. So you get a higher yield, and then as yields continue to come down, what you bought for a lower premium starts to be increase in price. So it's kind of a couple things together. Anyways, so I'll say market believes yields have topped out. Market believes Fed is nearly done raising rates. Believes, we've got all caps. I think I kind of added one a bit there, but believes inflation is continuing, I'll say is going to continue to come down. Believes economy is slowing down. This is what is giving our market a boost. Basically, if you sum all this up, it looks to the market like we're rounding the corner of a somewhat recessionary, kind of crappy economic inflationary period. And that's it. That's why we're going up. And obviously, we're not going to complain. All right. So now that you guys have had a little bit of time to think, how is this situation going to help stocks for their next earnings? We're still going to struggle. Some stocks still going to struggle because of where rates are. What's going on? Dave says stocks that have struggled may change if their earnings change. Stocks that have done great will continue to do better. So why do you feel that way, Dave? Dave says, for all the reasons you mentioned. Haha. Okay then. Well, I can kind of agree with that. Um, Meta is almost nearly back. Let's see. This is what I wanted. Almost back to their period before they fell big. They are back. Here we are, 315. They had gotten up to 382. I think 350, 330. Yeah, 330 in here might be a resistance level. And 350, 375. But look how crazy this is. Just a huge, ridiculous, amazing, awesome run up in Meta. They've been showing it in their earnings that they're turning things around. They're being more responsible with how they're investing in their metaverse. They're being less aggressive there, which was the main reason for the falling out here, and because of interest rates, right? Which kind of messed up a lot of the tech stocks. But they turned things around nicely. They've got a new Threads platform coming out that's going to be a blatant ripoff in my eyes, and pretty much everybody else's, I think, of Twitter, or at least to um, have a Twitter alternative, which there are many already, but not many Twitter alternatives have also already hundreds of millions and if not billions of people on other social media platforms that they own, such as Meta that has Facebook and Instagram. They already have everything dialed in and ready to go. Really kind of makes me wonder why they didn't do something like this before. But they're seeing how things have gone with Elon Musk taking over Twitter, and And to Meta, it just looks like, obviously to them, that there's an opportunity to um, take advantage of here. Don't get me started on what that means as far as politically, with the FBI telling Meta and Facebook and the other social media platforms what can be spread and what can't be said and what accounts need to be shadow banned and all this stuff. I don't know. Um, that's outside of the purview of fundamentals of how these businesses are doing. And not completely, but but I guess it remains to be seen what will happen there if Twitter will still hold on to a bunch of people, a bunch of users, and if they will be able to continue with their free speech um, preference. I don't know what else better way to say it, but a free speech, believing in free speech, not censoring bad things, or at least things that are deemed as some to be bad. Hopefully Meta will find a better way to do that, or at least a way that allows people to say things openly, and one can only hope. I'm a big fan of free speech, and I feel like if you don't like something someone is saying, you don't have to look at it personally. Seems pretty straightforward. If you can't handle what someone is saying, don't listen to it. It's that simple. All right. So maybe Dave, back to your point. Hopefully one that we can continue to see recover to highs relatively soon. That's definitely what it looks like, but obviously their earnings have to continue to follow through with that. Um, what else do I want to say about Meta? Oh, we took off. Some of you remember that we have a bull call position, leap bull call position on Meta for a few clients. Some people had two sets, some just had one. And everybody that had two, which wasn't very many people, we took off one of them. So now everybody just has the one set. 240, 300 strike. So obviously, if it's a bull call, the lower strike 240 is the long call. The 300 is the short call strike, and those make money, continue to make money over time as the premium in this short call kind of loses value, loses time value. It's going to increase in value as stock goes above 300, but since we had bought those, way back here, um, when it was trading at below 240, we'll have a lot of nice time value bleed off on those to offset any time value loss on the 240. But we took a few of those off. The idea is, we can let it run into the earnings and decide if we continue, maybe take it off at that point, or let it continue to prove out. It was like a 40% profit. So we'll look to find the best time to take a profit on all the rest of those full call contracts. Wanted to look at Disney real quick. Everybody says they're bleeding cash, they suck, they're the worst. Their movies suck. um, I don't know. Well, I do know, but some of their movies have not been great. But, you know, people still go to them. A lot of people wait for them to come onto the streaming platform, so the theaters don't necessarily get the big push that they had in the past. But at the same time, they've got ridiculous amount of big movies coming out through the fall time, towards the end of the year and next year, that could be awesome. They have Bob Iger back in. He's been firing a lot of the losers and starting to right the ship, but obviously it takes a bit of time. Yesterday it was confirmed that Bob Iger would extend his stay until 2026, when he came back last fall it was supposed to be till 2024, but obviously that was extended, so that's great news for Disney. Bob Iger was the one that got them up to this 203 top, getting the streaming and getting the streaming going, getting everything running along very nicely. Bob Chapek changed a bit of the culture. It turns out that people don't really love any of the woke agenda, I'll say. At least not so advertently that way. I did see, let's see, the Elemental. um, there was more complaint of that movie being woke. I didn't really see that. I went and saw that movie, but I didn't see where it was necessarily that way. It was pretty straightforward. It was a nice little movie. Nothing I'd care to watch, you know, again. I mean, it's no Cars or Toy Story, but it didn't seem to be as crap as everybody said, which was kind of unfortunate. So that's that. But the other complaint I've seen for Disney, which I don't see at all, is some analyst, somebody, I have to go back and look. I can't remember who it was, but they've been saying that parks have been really slow, foot traffic on their parks, which I don't know where they're getting that information. It's just kind of as I've looked into it, there isn't a lot of real concrete backing to that I can find anywhere. Maybe just some assumptions. I don't know. But I can tell you, because we have at Hurley Investments several people that have been going to Disneyland, Disney World, and reporting back to us ridiculous hour and a half, multi-hour wait times for rides through this summer. So I really don't buy it. So to kind of sum this up, Alice comes out to say that foot traffic at parks is low. As we have gathered real eyewitness accounts of wait times at parks. We strongly, not stringly, disagree that parks aren't getting foot traffic. I'm just saying visitors. According to their earnings numbers and the revenue from those parks, the parks of the U.S., Florida, and California parks have been humming along nicely. The Europe park is even doing well in France. The only one that was really struggling was the China park. It was obviously they're still being late to the party because they're late to opening their country. And that one's just starting to turn around, start to pick up a bit. So that was really the only one that criticism might be agreeable to, but that's just according to the earnings reports that Disney has come out with. And another point to make, he just started to, let's see, it was a couple days ago, so Tuesday, Disney does, as some of you know, they'll do a Halloween special party in September, October. And in order to get to this special party at the parks, you have to pay for a different ticket than the regular park ticket. The Oogie Boogie Bash is what it's called. And these tickets are highly sought after. Crap, how do you spell sought? Let's see, after Oogie Boogie Bash tickets. Guys, Tuesday morning, these tickets go on sale, and you have to be in the website, in your account at Disney, your Disneyland account, to get these, um, to get in this queue, online queue, just to get in to then buy your tickets. Does anyone want to guess how long we waited in this online queue to get in to buy tickets? Any guesses? As you wait in this online queue, it tells you you have about more than an hour before you can get in to purchase tickets. Dave said 2 hours. Close, Dave, but actually not even close, not even a little bit close. More than 2 hours. So again, these are special tickets for basically an after party where at 6 o'clock at night on these special dates. It's not every night, but it's every couple of nights they'll do this boogie boogie bash, and it's just Halloween stuff. Is like special stuffs. The Mickey's dressed up all different characters, and everybody's dressed up for Halloween, even before that, but it's just kind of more of the Halloween stuff. There's parade, a special unique parade they only do at this. There's trick or treating, it's all sorts of stuff. So these are highly sought after. It took us, let's see, it started, we had to be in the queue before it opened. So around 9:50, but it's 9:30, whatever it was, but it opens at 10. The queue for tickets, what did I do wrong? Started at 10 my time AM with about four of us just waiting in the same line just to see if we could get some of us could get tickets, or if one of us got in, then one of us could get all the tickets and do the whole thing. We got in at 10. No one else was able to get tickets except for me. I got in at around, let's see, it wasn't till like 5 o'clock. It might have even been a little later. And by that time, however they had this algorithm choose who got in and whatever, who had to wait. It must have been of just like, you know, randomly choosing because we were all in there at the same time. So how do they decide who gets in first, right? I was the only one that even got in. Nobody else could even get in to buy anything. And by the time I got in, uh, most of the dates were already sold out. I could only get kind of earlier dates that were less sought after, and that was even after just clicking in and pressing to get it, saying that I couldn't buy that many tickets, having to go back out. They restrict you at 8 tickets, and trying to buy those for us and some friends that we're going to go with. But by the time I got in to buy tickets, there was only one date available, luckily, and it was absolutely ridiculous. So, all that to say, I don't buy it. I don't buy that um there's lower than desirable foot traffic in the parks. I don't see it. Maybe I should just try spelling correctly. So that is my in-depth analysis on those claims. You guys take of it what you want, but I'm sticking to it. Again, it'll take time. Glad Bob Iger is back to kind of right the ship. But that just takes time. Takes time to change the culture back, takes time to, get rid of idiots at ESPN, the big talking heads that cost too much and we don't really need them there. Takes time to get news stories that are just good stories written out instead of, an agenda. Those things just take time and still such a great opportunity there. 90 all the way to 200. Man, that's great. All right, guys. Any questions, thoughts, or anything that you have? Not that does it for me, but you know what you guys need help with. All righty. You guys have a good weekend coming up. Thanks, Jim, and thanks for the suggestion, Jim, on the honey. That has worked wonders. Just so you know. Jim helped me out with a suggestion to have local honey, take local honey daily for allergies, and it has worked wonders. Thanks, Jim. All right, guys, you have a good weekend. Take care.